Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis video for Tuesday, July 5th through Friday, July 8th, 2011 is brought to you by RealTick. All right, guys, let's get into the mix today. We have a lot to discuss this weekend as we get ready for a short 4-day trading week next week. First off, happy July 4th weekend to everyone. I hope everyone's taking it easy, being safe, and having a good time with family and friends. Now, looking back on last week, folks, let's just discuss that first. Epic rally is the only way you can describe it. You're talking about one of the biggest rallies this market has seen in years. In fact, I believe you have to go back to July 2009, which is just after the markets made their low on the S&P at 666. That's the last time we had a rally like this. Dow Jones Industrial Average, NASDAQ, S&P up basically 6 to 7% in 1 week, folks. Now, again, this week, a rally-long week, again, was called essentially by me. If we go back to last Friday, a week ago from this past Friday, I said, listen, guys, this market's going to rally into July 4th. Why? I mean, ultimately, why was it going to rally? Well, few things it had going for it. Number one, volume was going to be lighter. All right, that's always a given. Whenever you have light volume, always assume the markets have a neutral to upside bias. In addition, the markets were on a massive level on the daily chart. Take a look at this level on the daily chart. And I went over this actually in last weekend's technical analysis video as well, I believe. We talked about how you have this pivot low from 2009, and in 2010 we hit the same level. See this line just connect the lows? And if you look right here in 2011, just over the last couple weeks, we actually ran right into that line again. There was no way it was going to break on a holiday light volume week. If anything, it was going to create this large rally, or at least a rally this size. I thought, honestly, we'd probably see a 300-400 point rally. A 600-700 point rally was a little bit more than even I expected, but nonetheless, it was expected to see upside, and we got upside, folks. Major upside in the markets. Now, the question is, what caused this upside? Well, we talked about the light volume. We talked about the Federal Reserve. We talked about end-of-quarter window dressing. We talked about new money on Friday coming in because it's the new quarter. A lot of new money can be put to work. That may actually continue into Tuesday a little bit of this current week. But bottom line is, the market, you have to say, is a little bit short-term overbought. Here it was oversold from this drop here, and again from the pivot high, which, by the way, we nailed that pivot high to our members in the Research Center and Intraday Stock Chat. This high here, we had a down cycle literally beginning here. And sure enough, look at the down cycle. Now we called the upward move. It's been an epic move. Where's it going to go? Are we going to pull back next week? Well, I think, again, Tuesday's kind of a wild card day. First, what you're doing, you're watching to see what happens in Europe on Monday. Remember, Monday the markets are open in Europe, but in the U.S. they're closed. So, again, is Europe going to rally? Are we going to see more upside in Europe, or is it going to start to weaken? If it starts to weaken, then the U.S. markets may kind of pause or even pull back on on Tuesday. But if Europe's strong and nothing negative comes out of Europe, you actually could see a little bit more upside in this market early in the week. We'll see this little pivot high right here going back to May 31st and June 1st. If you take a trend line and just draw it across there, that's your most likely target of any upside in this market that's left. Now, ultimately, I do think the market does have a small pullback next week. I think it could start on Wednesday with the ADP private sector jobs numbers. Remember, last week we were supposed to get the private sector and the unemployment and the non-farm payrolls number, but remember, one of the key things here, that was pushed off. The government pushed it off because they didn't want to release it before the July 4th holiday, which again is a little suspicious in my view. The question is, was that number bad? Is that why they didn't want to release it and hurt the markets later in the week? Ultimately, that could be another reason why we saw a nice little rally there towards the holiday weekend. But either way, I do think that number is now it's got to be pretty good. If that number's not good, this market could get a little scared again. We had good manufacturing data last week. We obviously had other key stuff coming out of Greece's bailout aid package that was very, very positive for the markets. But again, any sort of kind of weakening scenarios now that come back in, the markets could come right back in. All right. But again, if you're looking at next week, I think you look at Tuesday. Depending on what happens over the weekend and Monday in Europe, Tuesday could either be a little bit more upside or you're going to start to pause and pull back a little bit. Then once you get into Wednesday with the ADP number, if the markets rally on Tuesday, then I do think we pull back on Wednesday and possibly the rest of the week. Not a lot. I don't foresee a big pullback. I'm thinking that maybe over the next week or two, you have a 50% retrace in the cards. Essentially a 50% retrace. You take this pivot low right here, which was around the 126 level, and now we obviously went up to about 134, maybe even if we get a little higher on Tuesday to 135 or so. But you look for a 50% retrace as your max retrace, and it might only be 0.318, which is a Fibonacci level. level. But either way, I would have to say that you're definitely looking for a little bit of a retrace coming in after, again, you could hit this upper level. That's a definite possibility. But if you hit that upper level, then look for the retrace. All right. And again, there's no guarantees we hit it, but that's the first major resistance on the daily chart. If we go to the intraday chart on the spiders, and remember, the spiders represent the S&P 500. The SPY is a tracking ETF, exactly a one-to-one with the S&P 500. So that's what you're looking at here. When you look at this chart, you're essentially looking at the the S&P 500. But just look at the size of this rally, guys. I mean, even going from last Monday, the markets were below 127, and by Friday, we're at 134. It's amazing how you kind of stall at these major levels. See these trend lines? These are all master trend lines given to our members in the research center, which, by the way, there's a free trial to that. There's a 7-day free trial. Take that because we're giving out master trades every single day. We're giving out our master levels in video form every single day. You get new videos, you get new market reports, you get new trade alerts, you name it. It's all inclusive there. And you have a free trial. Otherwise, it's $49.99. But again, the beauty of it is that if you cancel before the end of the 7 days, you're never charged anyway. So it's a beautiful thing. And if you like it, which most of our members do because they make so much money off of it, then you might as well just stick with it. But in any case, free trial. Give it a shot, guys. Look at this market up. And again, notice how these levels right here, you can see the sideways consolidation. That's actually an in spirit of bullish flag consolidation of what we teach in the research center. And then look at it break up again, and it went right up to this next major level. If you zoom out on the charts, take a look at this, guys. See this level right up here? You can see little pivot high, little pivot low. That's where you're getting those two levels from. And the market seemed to stall out on Friday. If it gets through that level, this is the next spot it's going to, right here. See this 135? Actually, it's 134. 90 or so, but very likely it'll pierce that level if it gets up there to 135 or so. But either way, to me, that's the extent of the upside in this market. I don't foresee it lasting longer than that level in the short term. If we hit that on Tuesday, then I think you pull back Wednesday, Thursday, and possibly even Friday, and that's when you start the 0.382 retrace. Again, it's an interesting because Tuesday's that wild card day. We could have a pause or pullback in the market, a small one on Tuesday, but only if Europe starts to fall on Monday. Otherwise, I'd look for neutral to upside hitting that 135 level, and then you look for the pullback, all right? So again, this is your pivot high. This pivot high is exactly what we see on the daily chart right here. These are one and the same. You're just looking at a 10-minute chart on the last chart I just showed you, and now you're back to the daily. This is either way. This is your kind of the exception or the pivot high that you think that this market will go to. That's at least what my analysis is showing me. All right, so that's what we're seeing on the S&P for next week. Tuesday's a wild card day. What I'm going to do is for the Research Center members, if you're a Research Center member, Sunday night we're going to do Monday, because Tuesday markets are open, but Monday they're closed. Monday, tomorrow night, No Hype live broadcast, guys. We're going to go over all these charts. We're going to look at the futures. We're going to discuss what's going on in Europe. All right, so we'll have a good basis at that point from what happens in Europe since Europe is open. And again, we should get a good bearing, and I'm going to really start to prepare our Research Center members for the market trading this coming week, starting Monday night, 9 p.m. Eastern Time. In addition, Hidden Gem will be released this week, most likely on Wednesday. Hidden Gem, which again are master small caps that I do a lot of research on, and I bring them to market. And again, these small caps have explosive upside potential. And again, that's what we're going to be releasing, and that's part of the Research Center as well. So if you're involved in the Research Center, you'll get that hidden gem most likely on Wednesday, probably around 10 to 10:30 a.m. in the morning is when I'm thinking I'm going to release that. All right, so again, if we can go over a couple of the charts here, I want to take a look at the UUP. UUP continued to fall on Friday. Notice last week, look at the dollar last week. 1 down day, 2 down days, 3 down days, 4 down days, 5 down days. This is the daily UUP, which is a mirror of the dollar. Notice how the down dollar days caused the market to go up. So you had 5 up days last week. Every day was up in the markets. That was because the dollar fell. And I know it seems a little strange to those of you that are newbies out there, but I'm telling you right now, the dollar literally dictates the market. The market will go in the opposite direction. Literally intraday, you can watch the dollar up or down tick, and the markets will intraday do the exact opposite as that's happening. It's an amazing thing, amazing phenomenon. But again, it's partly based on black box trading programs. It's partly based on the fact that as the dollar declines in value, stocks must be valued higher, right? Companies need to be valued higher if the dollar's going down, because in real terms, Microsoft is still worth a lot in real terms, and that price that Microsoft, for instance, I'm just using an example, must gain in value as the dollar declines, right? It's almost like gold. Think of stocks and companies that are traded as gold. As the dollar declines, gold must go up, right? In terms of dollars. Same thing with a company. If you take that tangible company, that building that it's based out of, the software that it produces, or this that it produces, it must go up in value as the dollar declines. So that's why these black box trading programs are programmed to push the market or buy the market when the dollar downticks. And you can see certainly right here, dollar goes down 5 days in a row, markets rally 5 days in a row. And now, in all fairness, guys, there is a little bit more downside on the dollar. You have a small level of support right here. This is just a small, this is called what I call a minor level around $21.21 on the UUP. But again, it's just a minor level, and ultimately I think you're probably headed for this area down here, which is around 21.05 to 21.04. All right, so again, yeah, it could get a little bounce off this level, but ultimately with these two moving averages above, it may not get much of a bounce. And then ultimately, if the dollar comes down lower, this is right where it's going. And this is ultimately where I think it'll settle, and then we might have a little bit of a bounce in the dollar ultimately, all right? So keep an eye on that. Let's take a look at gold. Gold continued its descent on Friday, although it did rally towards the end of the day and come off those lows as the dollar fell. Either way, this was a beautiful call. We said bearish pattern. Notice how the 20 and the 50 moving average were curving down. That's a very bearish consolidation pattern right here. The white lines that I just drew on. Notice how the bear flag does start to play out to the downside. So beautiful little sell-off in gold. SLV, guys, same thing. This call went out a couple weeks ago to the research center, which was an in spirit of bear flag. I said as long as it stays below this yellow line, which is the 20 moving average, then silver will have a fall. A lot of our members here shorted right here, and look at the downside they got. Beautiful 3-bar surge to the downside. For those of you that traded with us in the research center intraday stock chat, which both have free trials, as I said before, you know that after a 3-bar surge, you start to look for a little bit of a bounce. It does get a bounce, and now you actually have a new bearish pattern that looks like it's playing out to the downside. I ultimately think the SLV, which is the silver ETF, is most likely going to this 200 moving average right there. All right, so again, keep it in mind, beautiful little pattern development. Just follow price pattern and time. It's so amazing because a lot of traders out there, a lot of newbie traders, they look at RSI, stochastics, MACD. I look at that and say that's BS. It's honestly BS. Traders who trade off of that just don't know any better at this point. There's a reason why the average traders use it, and that's because it really has a low success rate, but that's all they have. You have to step up your game. Bottom line is price, pattern, and time are proprietary techniques, are what you use. That's what our members make so much money off of. That's what we make so much money off of. And it's simple. It's keeping things simple, but it works. Again, remember, if the average person has it to their ability to use it, chances are it's not going to work very well because the institutions will trade against it. And don't think institutions don't do that. Institutions 100% trade against that. When they know the average person's shorting the market, what do you think happens? I mean, look at the market. Let's go back to the SPY. This is amazing, folks. When the market's trading down here and I'm calling for a long, when we're down here, the average person's bearish, right? I mean, just think about the bearish sentiment before last week. It was unbelievably big. You had media on CNBC bearish. You had, Bloomberg. You have everyone out there bearish. That makes the little amateur guy bearish. He shorts the market. What happens to the little guy? He gets blown out of the water on a short squeeze. All right, that's why you have to follow price pattern and time because I went out there on record, and again, you can always read our hot chart and alerts if you get the free trial or the research center. Read the free trial from last Friday, a week ago from Friday. In my afternoon report, I said, guys, I don't see this market falling next week, meaning this past week. I said it's going to rally, and look at this, 600-plus point rally in the Dow Jones Industrial Average. And again, that's the position of the institutions. I mean, essentially, what we're doing is what the institutions are doing, so you have to be on that side. If you're not on that side, you're going to ultimately lose money. Yeah, you'll win every once in a while by luck, but it's a losing battle. It's kind of being the person goes into a casino. You're going to ultimately lose. The odds are against you. What you want to do is make yourself the house. Become the house, and then trade in that direction. Like the institutions are known as being the house. I mean, they're the ones mostly winning. So you got to be trading that way. If you can do that, you'll make money in the market. If you don't, you lose money. That's simple. All right, let's go over a couple other charts here. I want to take a look at some big rally stocks. There are some stocks that have rallied humongously. Take a look at Google, guys. Google piercing the 50 on Friday. I do think this is getting towards the end of its run. Look at this move on Google from basically $475 all the way to $5 and almost $25. That's a $50 rally, 10% essentially in Google. You don't see rallies in 1 week in Google like that, folks. It's the same thing as like when you look at a stock like Apple Computer or Amazon or Chevron and Exxon, JP Morgan. I mean, to see 10% rallies in a week in a market cap company of that size is unbelievable. It's like IBM. Like, look at IBM. IBM from this pivot low it was basically at 160. It's now at 175. which is essentially a 10% rally. I mean, you've had 10% moves in a lot of these stocks out there. And we're not talking about a small cap or a mid cap. We're talking about a large cap. And that's amazing. Absolutely astounding. All right, in any case, taking a look at a chart like IBM, what's even more amazing about IBM is look at this. It actually hit a new all-time high on Friday. Friday, it took out the highs. Now, a lot of amateurs would be buying that. I actually like that. I'm not personally short, but I like it as a possibility of a short. Anytime you break a double top high and you let it pierce, the amateurs usually jump long. Seeing that close, they'll jump long, especially if we gap up a little bit on Tuesday. And then ultimately, what you'll see is a reversal. And mark this video right now. Watch if we do gap up on Friday, on Tuesday when we come back from the July 4th holiday from Monday, you will see this actually reverse by the end of the week and not sell off that much, but it's going to be enough to take the money from the weak hands, which will be buying it up here, and you'll probably see it back down to here. I mean, it won't be a big sell-off next week. The volume should still be light next week, which is going to keep it from having any sort of major downside, but ultimately you will see that come back down just a little bit. It'll be more of a consolidation, small pullback week. That's what I'm thinking net. And again, Tuesday, remember, Tuesday's that wild card day. Tuesday's the day where we have to watch what happens in Europe. We have to watch what happens, obviously, Monday in their trading and see if there's any new news on Greece or Portugal or Spain. And then, obviously, look at the dollar over the course of the trading, and that should tell us as well. All right, but really fantastic. A rally like this does not come around very often. In fact, you can see it. It was 2 years ago at this point, even a little bit more than 2 years ago. Yeah, right around 2 years, right? July 2 years ago was the last time we had this type of rally in a 1 week period. But the funny thing is, think about this, guys. Back then, the markets were still right around that 700 level or so on the S&P. I mean, now the S&P is much, much higher. The S&P is trading right around 1340 bucks. So it's actually double where it was when that initial rally, which tells us it's even a bigger move and a little bit more on the extended side. But again, if you think about it, there were just so many bears out there, it was inevitable. Now, I made that case back a week ago plus to people, and the rally did come, so we'll see what happens in this coming weeks. We'll see if, again, Tuesday's that wild card day, and then I think, again, markets most likely pause or pull back a fair amount of the later portion of the week. And I think, again, this coming week, you probably just have that consolidation pullback week when you look at the end of it. And we'll analyze it in the next week's video. We'll see if I'm correct, all right? All right, taking a couple other just notes here. Another stock that has had a monstrous rally. Look at this move on Caterpillar. Caterpillar is trading up about from 94 bucks now to 109. Think about the percentage gain on that. That's what is that? About a 15% move on Caterpillar. Monstrous move there. Caterpillar's going to have a lot of resistance coming up as well. I actually may short personally Caterpillar. If it gaps up on Tuesday to this level, I think I'll pull the short trigger on it at right around just underneath 110-ish to 109.75. If we actually could get a gap up of just over $1 or so, or anything above that, I will be looking to probably short Caterpillar on Tuesday morning. So I'll give you guys that little heads up. If you want the live trades, then you need to log into the Research Center, and obviously I'll post them live there. Or take the free trial, take the chat room. Chat room and Research Center, you might as well take them both and utilize the free trials for both of them. All right, guys, I think that's enough to give you guys. I think at this point you all know what I'm looking for next week. The accuracy continues. All I can tell you is come join us here at InTheMoneyStocks.com, and you'll start making money like the pros. Be on the right side of the trade. I mean, I think that's the most important thing for the amateurs out there, and we're here to help you. I mean, I'm the first one that goes against the institutions. I think the institutions, honestly, almost steal money from all of you guys. And bottom line is, it's important to be on the right side of the trade. All right? Got to do that. Take care, folks. Have a great, great rest of the holiday weekend, and I look forward to trading with you all. Remember, No Hype Live Monday night, 9 p.m. live. You can ask questions of me. You'll talk to me. You'll type in. We'll look at charts. Then Hidden Gem, obviously, on Wednesday or so, I'm guessing. Again, major Hidden Gem with upside potential, 50 to 100% in a short amount of time. And there'll be many, many trade alerts starting to be posted Monday night, I believe, for the coming week because the markets are so active right now, so volatile, and there's lots of money to be made. Take care, and again, come join us here. Free trial at InTheMoneyStocks.com.